Hello and welcome to this Friday's live expose with Jack and I. Welcome if you are new, if you are repeat and you watch us every week. Thank you very much. It makes it all worthwhile seeing the same faces over and over again. It means that you're coming back for the value that we are hopefully giving you. So this week we're going to be looking at a few things. We're going to be looking at mortgage rates. If you've been off the planet over the past couple of days, you'd have missed out on all of the rises. We're going to be talking about our social housing portfolio and the sale that we're looking to do on that. We're going to be looking at the Aura website, which has been updated. Business coaching within XP Surveys. Last night, I was out presenting about sustainability at the Central London Property Network. We had some success with one of our planning approvals for the old maltings. Jack's going to be talking a little bit about business rates and rebates we've been getting on one of our projects recently. He's also had a couple of landlord issues, some quite funny videos, so stay around to the end for that. And then we're going to be talking about Sunset Court, which we're going to be doing open day on the 10th of June. So stick around for that as well. So welcome. Let's get stuck in. Jack, if you want to crack on with mortgage rates.
Hello, everyone. Thanks once again for joining. You might recognize the scheme if you've been following us for a short while. This is a development that we picked up 2 awards for, one at the Developers Club and one at the Property Investor Network. When we bought this site, we were looking at locking our interest rates at the end of the journey of development at something around, I think it was 3.5 to 4.5%, depending on whether we go for higher LTV, loan to value gearing, or lower. When we pretty much finished and we decided to re-roof and do a more extensive sort of phase 2, as it were, on the site, but just before we were coming to market for mortgage rates was when Liz Truss decided to create a bit of upset in the mortgage market, and obviously the gilt market moved, the yield market moved, base rate was going up. So we're in a very different position now. Fortunately, this scheme was in excess of 30% return on GDV after costs. So we've got a hefty 7-figure profit, which is being converted to equity when refinancing this building. If we hadn't generated that scale of project and value, I think we'd really be struggling to even warrant keeping this building, and we would probably be selling. But the mortgage market's moved, the base rate of England's gone back up. We got a little tip off our mortgage broker to put our application in as soon as possible so we can lock in better rates. So if there's anyone out there looking to refinance something, get the application in, get your mortgage broker to get head to terms, agreed terms, and normally they will warrant what's in legals. They should know the lenders that would probably warrant that rate. There's talks of maybe even more of a rise. Obviously, it's a massive unknown, but just what we're doing is we're trying to expedite the process of getting applications in so that we hopefully adopt better rates. If better rates come in the market, then you can just go back to the market again. If better rates don't come, then you can adopt what you have agreed with the lender. So a bit of a tip and a bit of an update on what we see in the market.
Nice. Good stuff. On to point number 2. So social housing portfolio. For those of you that have been following us, to be honest, we haven't spoken about it a huge amount. We've mentioned it over the last couple of weeks in these live calls, but we have actually been really busy bees in the last 2.5 years building a 114-bed social housing portfolio in South London, predominantly Croydon and Streatham. The portfolio consists of 14 assets, most of which we've finished. We've finished about 12 of them. We've got a couple in construction at the moment, and they're pretty much due to be finished end of July, August time. So yeah, we've been really busy building this. It's an interesting subject. We see it quite a lot lately, and we're looking to now sell the portfolio. We've been given a mandate from a housing provider of 300 units. We've delivered 114 of those, and we want to go again and continue to build to reach that mandate target. So we're really calling all kind of family offices, funds, REITs, real estate investment trusts. If anyone's looking for securitized income, effectively this is a portfolio sale based on the securitized income that we've got. There's a 1.25 million pound rent roll on this portfolio. So if you're interested in investing in longer term, I think the WALT on this is just under 17 years. So all of our assets are on either a 10 or a 25-year lease. So that's guaranteed income upwards only for the term. And I think on average, the local housing authority rate has gone up between 3 and 4% every year. So if that's of interest, do get in touch. Jaff, I don't know if you wanted to mention anything more on that.
No, just in addition, if anyone's interested in this space, even from a smaller scale perspective, please get in touch. We've obviously got a 14 assets that are under delivery and delivered and incoming. But if you want to hear more about how that works on an individual level and how we've got to that position, and you're maybe interested in that secured income, but on a smaller scale, do reach out to us.
Nice. Good stuff. And then number 3, we've been updating our website for Aura over the last probably 2 months. So Dan Burge, who's my marketing manager, joined us about 4 months ago, I think. And one of his tasks was to revamp the website. He's been basically staring at a computer screen for the last 4 weeks, updating this, and it's looking fantastic. There's a couple of extra tools that we've added, like this one. So we've now got a map on our projects page where you can click on each individual project and see where they are around the UK. I mean, predominantly we're in the southeast. Most of our work is in London, Berkshire, Oxfordshire, Hertfordshire, as you can see from some of these images. But it's really starting to take shape. I'm just going to flick around a little bit. It's just been revamped in terms of the styling and the kind of the way it was presented. All of our projects have been updated. This is one of Rod Turner, one of his projects, which looks absolutely incredible. So there's a lot of interesting project pages that now have things like floor plans that you can look around to see how we've gone from the existing to the proposed, through construction, photos, so you can see the kind of way that it's been put together. And yeah, do check that out. It's www.aurahomes.co.uk if you want to have a flick around the website. And if you've got any projects you want to discuss, get in touch. The other thing that I wanted to touch on from an Aura perspective, we just relaunched or launched our latest video on YouTube. So the top questions for your architect before hiring them. We've had some really great feedback on this in terms of people saying they wish they'd watched this before inquiring and starting their works with their architect. So yeah, don't make the same mistake as those people. Head over to YouTube, head over to Aura Architecture on the YouTube channel, and take a look at that.
Good. Shall I take over this one?
Yep.
So Ben was selling it up in Croatia. So myself and Heather, who's our business manager in the photo, took the reins on doing our business coaching and XP surveys. We've mentioned on these calls before that we do mentoring and business coaching ourselves for what we feel that we specialize in well, which is property. Obviously, XP Surveys is our subsidiary or sister company that provides measured building and topographical surveys products, and that's very, very much a service-based business. You could argue today that I didn't really have a service-based business as sort of large as XP Surveys before. Obviously, Ben has Aura Architecture, which is a very alike business. But we, in our coaching sessions, it's very much thinking about the bigger picture, setting sort of lofty annualized goals, breaking it down into quarters, breaking it down into months, and then breaking that down into actions. My view is if you don't know where you're going, how can you make sure that you're really turning the screw within, whether it may be sales, marketing, operations, the finance element, or the team element, on a day-to-day basis. So it's a digestible way about. We have a consultant that comes in once a month, slaps us around, and then sends us on our way with a big action list, which is good. It's obviously sometimes eating that frog is difficult, but you can definitely see benefit and traction with it within the company.
Good stuff. Cool. Next point is yesterday evening, I had the pleasure of presenting at the Central London Property Meet, which is Brendan Quinn's event. We've been sponsoring it with Aura for the last 3 or 4 years. And there's been a huge amount of changes from a sustainability perspective over the last year or so in terms of the building regulations being updated, and new requirements for new builds, conversions, changes to SAP and EPCs, and how they are presented and calculated. So yesterday, I gave a quick update, a 40-minute presentation on things you should look out for we're due to be net zero emissions by 2050 in the UK. So there's a huge push to kind of push down the amount of emissions that we do create in the construction industry. The construction industry globally accounts to 38% of carbon emissions. So really, the onus is on us as developers and investors and landlords to try and create better housing for our tenants. So whether that be from a well-being perspective, or also from an energy cost perspective. So we talked a little bit about the latest building regulation updates, how you kind of achieve those targets in practice by the be lean, be clean, and be green methods. We talked about how much it's going to cost you in terms of implementing some of these things. A little bit about kind of the thermal properties of wall elements and windows and roofs, and talked about the implications of the new regulations in terms of the costs that are going to be incurred on those. And actually, I ran through an example, which I will quickly do now, because the bottom line for developers, we looked at a little bit of a case study in terms of a single dwelling in, let's say, Surrey, GDV of £1 million. Your profit margin as a developer, you'd expect to make 20% on that, so 200 grand. Development cost might be 450, finance 60. So basically you have a residual land value and a property purchase price of 290 grand. Now, if you're buying something now and you've got the planning approval was gained a year ago, or even 18 months ago, or even 2 years ago, and you plan to implement that in the next 12 months, you're going to have a shock when you get the prices back from your contractors. And the reason being is that the planning approval that you've already obtained, or the previous owner obtained, that you're buying, probably didn't account for all of these extra things that you now need to do from a building regulations perspective. We talked about thicker walls. The only way of increasing the thickness of walls and staying inside the realms of the planning envelope that you've got approved is by reducing the internal square footage. Now that has a big impact on your GDV. The average reduction in area was about 4%. So you're losing basically 40 grand on your GDV. Your development costs are increasing because of the extra cost for the installation, all of the air source heat pumps and the relevant renewable technology that you're installing. The extra compliance is probably going to take you 3 months longer. So your finance costs are going to go up. But the bottom line is you've already purchased this. You've already agreed a purchase price. That's not going to change. That's a baseline. So all of this impacts your profit, your bottom line, to the tune of basically 45%. And this is just an example of how I do see some property developers getting into a lot of trouble over the next couple of years by not really understanding these changes that have come in from a sustainability perspective. So we did record the video of this. We'll be in the background kind of pulling that together in terms of getting it onto YouTube for everyone to kind of listen into, and we'll let you know when that's live. But really good meeting. There's about 40 people in the room, lots of new faces, which is excellent. If you haven't joined before, head over to Eventbrite, type in Brendan Quinn Central London Property Meet, and hopefully we can see you at the next one. Moving on to one of our biggest projects to date. It's called the Old Maltings. It is a property in Abingdon in Oxfordshire. We've already got planning approval under PD prior approval for 16 units. And we then phased the scheme to put in an external works package, which has now been approved as of last week. So really great success. It means that we can get additional windows and roof lights into the building to enable us to unlock areas that weren't previously unlocked, to go back in with an enhanced Class MA application. So the Class MA application originally was for 16 units. We've now got the extra roof lights and windows in there that now allow us to unlock more of the floor space to get from 16 units to 20 units, jumping from about 700 grand in profit to about 1.4 million pounds in profit. So huge uplift. This is a stepping stone to get, the final scheme that we want to move forward with. And yeah, the next phase will be a full planning application for 24 units, which is where I think we're going to end up on the scheme. Thanks for your comments, Ripsana. If anyone has got any more questions, do pop them in the comments on whatever platform you're watching on, and we will bring them into the conversation.
I'll take
Over to
this
you.
one over. Yeah. So you might be familiar with this site. It's a site we have in Spencer's Wood. This photo is actually during delivery, just before we did the residential development. But what we ended up with was 7 apartments and 7 offices. We retained the site and kept the site, and there has been a lot of juggling business rates. When we bought the site, it was already part offices. We obviously built 7 new offices. So there was a process where we worked through with a business rates consultant to ensure that during delivery, during void periods and vacancy, we negated as much business rates as we could possible. And throughout the delivery process, that was definitely a really key thing to be working on. Now we are in the renting or rented part of the scheme. We still have a couple of vacant units, so we're still battling with cash flowing those business rates. So a couple of learnings here. So we actually called up and saw online on our portal that there was a balance sat in our business rates account, and if I wouldn't have called, they wouldn't have told us that, and it was to the tune of £10,000. So the first thing that I requested was for that full balance to be refunded. So we basically had a ratings bill where at some point over the delivery we'd potentially overpaid, a tenant moved in and we got a balance back. So there's dates that overlay where we had paid for a period and then we get a balance back. So when you've got a building where you're letting out and you're getting tenants in, be really hot on actually checking in with the council to see if you've got a rebate there, because they might not tell you. And it's very difficult to understand because you normally pay a year in advance, and then you've got to work out dates for your tenant. Your tenant signs up for business rates, then pays for the second half of the year, and that it means you as a landlord have the rebate there. One other tip that I would also say, what I requested on the 2 vacant units that we have vacant and are still incurring business rates, and I just put it on the council to say, look, we actually built these because the council wanted offices. They're still vacant. Can we have a payment plan and split this over monthly direct debit payments? So rather than just sending bill after court order and trying to chase that payment down, we're now on a monthly direct debit, which obviously helps our cash flow because we've got rent coming in that pays that back out. But also we've just poured a chunk of change back into the business bank account. And just using the angle of let's pay this as we go through month through is a huge cost saving. So don't be afraid to challenge them. Don't be afraid to ask them if they owe you anything. And there's sometimes sums if you it depends what portal they use that should come back to you. And that was actually Wokingham District Council, and they didn't, which is quite frustrating because that lump sum has been sat in there not to our knowledge, which is frustrating but overcome now.
Good stuff. Got a question from Thomas. Thanks for watching. Would like to know your general thoughts on the property market now and going forward. Jack, do you have any insight into that? What are your thoughts?
Yeah, so I live in Henley-on-Thames. A lot of the buying of houses and developments that we do are in Oxfordshire. A lot of the selling that we do is in Oxfordshire, West London, and areas like that. I've found the residential property market still quite buoyant for buying and selling. It's still quite active. I've seen stuff go over guide still. That might be a bit of an anomaly in my area because from speaking to others, they're seeing it a little bit more sticky. But I'm talking about affluent areas that have been hiking up in pound per square foot values and general capital appreciation over the last few years, where I think that then the demand is still there for the properties to come on the market. We launched a 3-bed 3 weeks ago, which sold within 6 days at guide price in Central Suites, and in XP Property we launched 2 beds which went at pretty much guide in sort of similar succession. So we still see quite a lot of buoyancy in the market, but then obviously we have delayed things that need to come into the market, such as interest rates, affordability, the cost of living affecting the affordability of mortgages. I know that banks are stress testing income against the mortgages more so than the actual loan to values or deposits or whatever it may be. So the residential market I see is still pretty good, but that might be tapering off from a lot of people trying to buy and move and just actually falling into a category where it was really difficult to, and it's now that sort of what I would call afterburn of that part of the market. I don't know if that will end soon or keep going. We just sort of have to keep on going until we hear more otherwise. So in our location, it's still pretty good. I'm hoping that that afterburn is I mean, for us, we like speed and volume of turnover in the market for us specifically. So we hope that keeps going until interest rates start to boil down a bit and it starts to become a bit more affordable for people to get onto the property ladder and so on and so forth. The commercial market, well, I can give you a start. I think the commercial market is still quite competitive. There's a lot of buyers out there for good sites. I do think there's a bigger opportunity to offer a discount and buy things for less than what the market used to be. Ben and I have sold multiple sites in auctions over the last few years where we haven't done a lot with them. We might have got planning consent or even just drawn up a CGI and they've flown off the shelf. I don't think you'd have that same response in the market now, unless there's obviously good planning gain or in margin or something left on the table. But still fairly active in resi. Commercial starting to tail down a little bit. I don't really get why the commercial would, because I don't see the interest rates of development or bridging lending change hugely. It's probably more the build costs and the exits are still there. So it's probably more the build cost pushing that compressing that market a bit more. And obviously confidence, because commercial is more of a cyclical market. But that's what I see. Anything else to add, Ben?
Yeah, so some interesting points came out last night at Brendan's event off the back of some of the things I was talking about in terms of EPCs. 2028 is the time where the government have actually relaxed it. It was 2025 that they wanted all rental tenancies to be at least a grade C on your EPC rating, energy efficiency. And they pushed that back to 2028 because I think they realised how many landlords would be really up shit's creek in 2025 if they had to get a C rating and spend lots of money on their property to upgrade, which ultimately would mean a lot of landlords leaving the market. I think with the way that the mortgage rates are going and all of these other government changes that are coming in, it's really putting the squeeze on individual buy-to-let landlords, and that could mean opportunities for people. If tired landlords just want to get out of the game, they don't want to spend lots of money on upgrading their properties, there's potential for investors and developers like us to snap up some good deals and move forward and add some value ourselves if you know how to navigate them. One thing that a lot of people said to me after yesterday's presentation that not a lot of people know is, from a energy performance upgrade perspective, there is a cost cap on the amount of money that you need to spend to upgrade your property. So if your property's a G, for example, to get up to a C, could cost you a significant amount of money to make all of those upgrades. Now, the government have actually put a cost cap on that up to £3,500. So if you've spent up to £3,500 putting new LED lighting in, insulating the floors, insulating the roof, maybe putting a new gas boiler in, or other measures that have been recommended, you only have to spend up to £3,500. If you need to spend any more than that to get you to a C, you can claim an exemption from the need to do that. So that's not, a lot of people don't realize that they're kind of thinking they've got to spend a lot of money selling up, not realizing that actually all they really need to spend is £3,500, and then they get an exemption and that lasts for 5 years, at which point they then do have to prove that they can't spend another £3,500 to improve it to where it needs to go. To be honest, I think in the next 5 years the whole way we do EPCs and that whole legal process will be slightly different. I think it's a very rudimentary process that doesn't really help anyone or show a true representation of what your property energy efficiency is. So I do think by 5 years' time that will all change. So yeah, I mean, there's always opportunities for investors and developers. You got to know how to navigate them and know how to find them. And yeah, hopefully we can share some of the ways that we do that. But thanks very much for your question, Thomas. That's very, very useful for everyone. Cool. Back on to the
Landlord Issues, I believe.
Which is Landlord Issues.
Yeah. So
when do you want me to play the video?
let me give a bit of a run through first. So got into the office this morning. Already been to one of our other HMOs, which was an absolute tip, and couldn't help but give one of the tenants just a bit of a word saying that they need to sort their lives out. But yeah, so long story short, came into the office. My brother deals with a lot of the maintenance management and lettings of our portfolio. This is a property that we bought probably 2.5, 3 years ago. You can see that what we have done there is we actually quite a strategic planning application, which I'm happy to share on this one. It was an existing 4-bedroom house. We went for planning to convert the garage into a bedroom and split 2 of the bedrooms upstairs, which we achieved planning. And then we retrospectively under PD converted it to a 5-bed HMO. So similar to what we did on the old Maltings, phased our planning so that we could achieve a 5-bedroom, 5-bathroom HMO. This one's been running as smooth as anything for 2.5 years, and I don't need to touch wood because what you can see is basically the pressure tank on our boiler exploded from rust. And
was this an actual photo from your cylinder? Okay.
Yeah. And unfortunately, this is located on the top floor in the storage cupboard. So it's gone everywhere, and basically it's like a waterfall on every wall internally. Ben, you can play the video now to sort of see the trajectory of the water that was.
I love that it's like when you play the video, it's black for a while and all you can hear is water.
Yeah. Yeah.
Did the tenants not know where the water shutoff valve was?
So because it's a pressurized tank, it's all the water in the system anyway. So
I see.
Yeah, it was good fun. So that was fortunately Dawn, Rob, and Jay were dealing with that because I had quite a lot to deal with today. So I suppose the emphasis on team, and there's 40 humidifiers in that house now. It's been mopped and cleaned and worked on all day. And me and Rob are off to Turkey tomorrow, so it couldn't have been a worse timing. But it's not all highs in real estate and landlording. Yeah, I mean, it's just one of the parts of the parcel, and obviously because my brother doesn't come on here to the lives, it's probably the part that you don't see that brings us joys. And we've actually recently had a house where 2 tenants have fallen out and called the police on each other. So yeah, there's a lot of work to be done with managing people, especially tenants. But there you go. But with that, I'm sure that will be fixed up. We actually might have to look at some temporary accommodation for some of our tenants as a solution. But the remediation and the stopping of that has happened. We're actually fitting an electric shower so the tenants that can remain in the property can have hot water.
Is it an insurance claim?
Yes, we've sent it all over to the insurance company. It's probably worthwhile pointing on that. So we use the same insurance company for all of our properties. You basically get flood risk and fire cover on that. And I'd highly recommend them. They're called Insurance Desk. Josh will sort you out there. If you need an intro, let me know. So it's all been sent over to the insurance company. Although we want it, from a rental perspective, we want this done and sorted ASAP. So it may be a decision internally where we decide to just remediate it ourselves. But there you go, tenant joys.
Fun and games. Okay, on to sunnier skies. Come and join us on Saturday, the 10th of June. Is that now correct? That is correct, isn't it?
Yeah,
I think it is. Saturday, 10th of June. We are going to be holding a site open day between 10 o'clock and 2 o'clock in the afternoon, and we'll put on some nibbles and some drinks. We'll talk people through kind of what we've done, show everyone around the site, probably get a TV on site to kind of flick through some slides about the progress that we've made, and some of the financials, and answer any questions that people have about it. So if you're interested in coming along, put a message site day down in the comments, and we'll DM you to get details and pass you through to one of the team who can organize all the information and send you across everything that you need to know. Anything you want to touch on that?
No, for anyone that's been to our site days, we normally have food, refreshments, and we're happy to answer any questions. We even talk about how we raise finance on the site, how we delivered the site end to end. So it could be, if you just want to have a look at our product that we finish with, come along. If you want to learn more about producing property development and investments, we're happy to share the detail too. It would be really good to see some familiar faces, and we do have more than one site visit per year, so you can sort of see the progression of the sites as they come along.
Nice, good stuff. Anything else that you wanted to touch on?
No, all good.
Good stuff.
I'm sure everyone's gagging to get out in the sun.
I was going to say, bang on 30 minutes. The sun is shining. We'll see you all next week.
See you later.